Hello, fans of the Triple T YouTube platform. As a follow-up to our previous episode about life insurance, today we are going to continue that discussion and follow up with Credit Score 101. What that means to us as individuals, as well as how to take advantage of it. So without no further delay, I am going to go ahead and pass it back to the founder, the owner of Triple T.
Thank you for having me. So like you said it, we're going to talk about credit score. And basically it's going to be for our community, black people, Africans. I want you guys to understand the values of credit score. So without wasting time, I have an expert here, Mr. Fred Brady, the good financial background. So he's going to explain it to us. What is the meaning of a good credit score or credit score? So without wasting time, my first question is going to be, Mr. Brady, could you please introduce yourself to my viewers?
Thank you. Thank you for having me here, and thank you, viewers. My name is Fred Brady. I'm a financial advisor. I've been in the financial services industry for about 18 years now. And today we are here to discuss credit score.
That is great, Mr. Brady. 18 years is awesome. So, first question, can you tell my viewers, what is the meaning of credit score? Or when you talk about credit score, what does it mean to the viewers?
Excellent. So credit score is very similar to a report card. It's like you go to school at the end of the term or end of the year, you get a report card that you take home. So a credit score is your financial report card. And it's a range of numbers that start from as little as 300 all the way up to 900. And for credit score, the higher the score, the better it is for you. Maybe we'll get into the details very shortly.
All right. So, somebody like me, what does it mean to me to have a credit score? Like, what is it? What does it mean?
Excellent question. So for a credit score, like I mentioned, it is a report card. When you go to school at the end of the semester, you do get a report card home. Mm-hmm. Your report card is basically, again, your financial scorecard that shows how disciplined you are in managing your finances, paying your bills, and how much credit you apply for. So there are a few components that will make up the credit score itself. And we will further discuss it as we proceed. And you're asking, why is it important to you? It's extremely important here. It basically affects what interest rate that you may get. Now, first of all, even if you qualify to get any credits,
Right.
first of all, if your credit score is not at least around average, it may prevent you from even applying for any loan at all.
Okay.
And the second part is, even if you apply for the loan and you qualify, you may be paying a much higher interest rate. So for example, two people, one with a score of, let's say, 850, which is pretty high, compared to someone with, let's say, 400 credit score. Now, number one, assuming both of them are approved for the same type of loan, the person with a higher credit score will pay a much lower interest rate than the person with a lower credit score.
Interesting. So, what are some of the things or the impact people do that can affect their credit score? How do you get a high credit score? What are some of the things people can do that can affect their credit score? Explain to my viewers across the globe, especially we the black people, Africans. Sometimes you don't understand the values of credit score. So, what are some of the things we do that can impact our credit score so that you won't get a good credit score? I remember you make a reference about somebody having a 400 credit score and somebody having 900. The person with the credit score of 400 will pay higher interest. The one with the 900 will pay lower. So what would they do to have that low credit score? What are the impact?
Excellent. So for many, I would say, immigrants, especially when you first arrive in Canada, you don't have any history of credit at all. So the first thing you want to do is to apply for what we call a secured credit card. and I cannot mention any company's name here, but I can refer you to, if you call me one-on-one. The secure credit card means you basically make a deposit, for example, $500 on the credit card, and then you basically spend that money until it runs out. So if you deposit $500 onto a secure credit card, your credit limits, which is how much credit is available to you, will be that $500. And then you keep spending it until it runs out, and then you make another deposit. Maybe you can go up to $1,000 or maybe $700, and you use that credit card. And remember, it's your own money that you give it to the credit card company because you don't have any established credit history. And credit history basically is a report on how disciplined you are about paying your debts, and that includes car payments as well as credit card payment, student loans if it's applicable to you, or even your mortgage. So it includes all bills that are assigned to you. How disciplined you are to pay them on time, or at least make an effort to pay at least the minimum of that credit. And there are a few details that I can share with you later on.
Okay. So basically, based on what you just said, if you have a credit card, for example, and if you use it, try to pay it off the moment the bill coming will help you to boost your credit score. Don't just leave it out there for it to pass, because the moment it passes, you can have issue with it. Is that what you're trying to do?
Absolutely.
Right?
That's 100% correct.
Okay.
So to improve your credit score, yes, once you get a bill for a credit card that you use as an example, they will usually give you a minimum payment. And of course, at the bare minimum, you only pay the minimum payment. But to do even better, try to pay more than the minimum payment that they will assign to you. So the way to improve your score is you can even pay before the bill comes up because you know how much you spent. Pay more than the minimum, and don't use more than 30% of the credit available. So for example, if you have $1,000 worth of credit capacity, you don't want to spend more than $300. So the lower the amount, the better it is for you on your credit.
Awesome. That is great. Excellent question to the viewers. And my final question is, I've heard about the 5 pillars of credit score. They have 35%, 30, 15, 10, 10. And can you elaborate it a little bit more? I don't want you to go details about each and every one, but can you just explain the 5 pillars of the credit score to the viewers to a little bit understand about how it works?
Very well. So the whole concept of the 5 pillars, just to break it down to make it simple for us to understand, is they are talking about the type of credit that you should get, because not all credits are the same, right? And the usage, the amount, as I mentioned earlier, that you spend of that credit, and the history of it, how long you've had that credit for. So for example, someone say, I've had this credit card for 20 years, but I feel like I want to replace it, get a new one. You may be tempted to do so, but if you do switch and you cancel that credit card, it goes with your history. Your history will not be forwarded over to the new one. So the longer you have a credit, the better it is for you. So it actually gives you more points if you keep one particular credit for a long time, because that shows the consistency in your payments, so they can see how consistent you are with the payment and how well you basically manage your debts.
All right. Thank you, Mr. Brady. To the viewers, you hear from the expert mouth. But before you let Mr. Brady go, I would like to say, my people, my Africans, please see the importance of credit score. Maintain your credit. Don't just, because this country, as you all know, we live on credit. So the good credit you have, the good loan you can get if you want to get a loan or if you want to get a mortgage. So maintain your credit score. Don't just go grab a cell phone or anything and just don't pay the bills and they take you to a correction where they messed up your credit. So please maintain it because you need it and you will need it. So before I let you go, is there anything else, Mr. Brady, you'd like to tell the viewers before I let you go?
Great. So yes, as my friend Ben mentioned, your credit score is extremely important in Canada here because, like he said, we basically live on credits in this part of the world. Everything that you want to do, buying a car, buying a home, even some people, they like to finance their furniture, everything is based on credit. And it's really, really important that you maintain a very high credit score. Again, that helps you to be able to qualify, number one, for a loan. And also, a higher credit score allows you to be able to negotiate for a lower interest rate. It could be on your vehicle financing or your mortgage. If you have a higher credit score, you're able to negotiate with the lender for a lower rate. But if your credit score is low, number one, you may not even be eligible, you may not even qualify for the loan, let alone negotiate for a lower interest rate, which means a higher interest rate means you are paying more of your money to the lender rather than helping you build a better financial future.
All right. Thank you, Mr. Brady. Viewers, if you need more questions and you would like to reach out to Mr. Brady, I'd like Mr. Brady to put up his number and you can reach out to him personally and he will come one-on-one with you, go over with you, free consultation with no fee. All right? So can you put your number out there for the viewer to...
Absolutely. So if you need further details on your credit score, how to improve on it, my phone number is 587-224-3485. Again, my phone number 587-224-3485.
Again, his phone number is 587-224-3485. Please reach out to him and I guarantee you will never regret it. Bless up.